Why did I just YOLO 15% of my account's value on margin to buy Tesla? What's going on, guys, and welcome. Today is Tuesday. It is the start of the 25th week of investing on our channel, where we put $50 every Monday through Friday into the account, and you heard me right. We just bought 80 shares of Tesla on margin. Each share was 17 bucks a piece. So we just threw a ton of money on margin to buy Tesla. And we're going to go over why we did that. You know, this is supposed to be a dividend growth portfolio. This is a long-term thing. This is not a short-term race. But we only follow like 15 stocks on this portfolio. So it's easy to tell when there's an opportunity, or at least I personally think that. And I'm not a wealth manager, credit counselor, or financial advisor. I'm just a dude on the internet in a triangle-shaped room. But I want to take a look first at why we made the play that we did, and then we're going to take a look at the portfolio and what's going on with the overall growth on our channel. All right, guys. So Tesla, what is it? Why did I buy it? How much do we have? How much did it cost? Here's the lowdown on all of that, right? So right now, Tesla is at $17.54. Guys, look at the gain today. 4.78% return. It's got a 0.68% return in after hours trading. We are riding this thing to the moon. I personally think there's a long way to go for the valuation of this fund, but first, before we get into that, we got to take a look at sort of what's going on here. As we come over here, we have the daily low was $16.85. We have the daily high was $17.51. I don't know how that's possible because the daily high says here that it was $17.54. Maybe that was right at close. I'm not quite sure. 52-week high, $21.76. I think we're headed right back to that, personally. We have a 52-week low of $12.53, right? I'm beating myself up that I didn't find out about Tesla or trust Tesla earlier, but that's okay. I have trust issues from crypto. Market cap. We're only at a $128 million market cap, meaning the whole size of this fund is only $128 million. That's really, really small for an ETF. You know, if you look at some of the other ones, crazy. You know, Jeppy has like 10 billion a month going into it. So yeah, we're talking pennies. Forward dividend yield. Not even calculated right. 27.8%. It's way higher than that, guys. And that's what got my attention, as well as a couple other outlying factors, which we're going to get into. But what do we have in Tesla, right? How much is our stuff worth? So we have 103.15 shares of Tesla. Our average cost is $16.59. So we're already doing well. I mean, you look up here and when you see it for $17.66, okay, good. We're doing pretty well. We've made $97.75. That's awesome. We're doing okay. Not bad. Dividends received, we've made $18.61. That is going to skyrocket next month, which is another motivator for this. But we now are a little overweight in our holding of Tesla. We have $1,809 of Tesla. It's now the highest holding in my portfolio, which I'm not very proud of, but we're going to roll with it. And we're going to see what happens and watch what it does. But there's a couple reasons why. The other thing that we've got going on is I bought 5 call options to buy Tesla at $17. So I have 5 $17 call options on Tesla, and they don't expire until like a month from now. So we have a lot of time to build some more value here. Right off the rip, I mean, any dollar or any penny over $17, I'm making $5. So if you just take the 54 cents on 17.54, so this 54 cents right here times 5, that's $270 of value, and that's not even taking into account the potential growth over time. So again, as I said, we're a little heavy in this whole Tesla position, but we have a couple things that we're going to do here, or that we hope play out. First of all, last month, basically all the months except for one, Tesla's dividend has been 5% per month. Yes, I repeat, 5% per month. So I find that very appealing. If I've got $1,800 in Tesla, to get 5% means I am getting a huge payday on a monthly basis. So we're going to use that to pay down the dividends. We're going to use the dividends to pay down the margin debt, just to kind of get us out of the situation. And then the other thing too is our leverage on margin really sort of eases off every day, because we are putting $50 a day into the portfolio. So unless I'm losing $50 every day, our position's not gonna be worse off. So we're actually pretty safe. We're using margin very, in my opinion, still fairly responsibly. Very responsibly would be to like put it into Jeppy, put it into Voo, put it into something that someone's heard of before. But we're sticking with this. And so now that we've seen kind of what we're holding on to, and again, guys, I think it's going to 21 bucks. So remember, if I'm making $100 per dollar that the stock goes up, times 5, because I have 5 contracts, we could be earning 25, 26, 2,800 bucks in that ballpark for our positions on Tesla. That is that might happen. I think it's at least going to 1850. Calling it now. At least 1850 by the end of next month. And with it going on 80-cent runs in a day, like you can see why. But that's what we bought. We're going to dive into Seeking Alpha, but first we need to look at, again, what even is this Tesla thing. So I'm going to pop over to YieldMax's website. So YieldMax ETFs, options for your income. Basically, YieldMax offers a bunch of funds that pay outrageous dividends. That's what they do. So whether you want that to be on Tesla stocks, Apple stocks, Nvidia stocks, they're just making these funds, trading options, and paying out absurd dividends. So let's pull up our Tesla. Let's see what they got. Fund overview. Let's take a look. The YieldMax Tesla Option Income Strategy ETF, Tesla, is an actively managed fund that seeks to generate monthly income by selling/writing call options on Tesla. Tesla pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of Tesla. So if you are bullish on Tesla, this is a good fund to possibly be in. It might be a terrible fund, I'm not quite sure. We'll see how it goes. But, I can read this whole thing. Basically, they pay out every month. One thing that I love about Tesla is they update their website every day with all of their trades. They open up you can see what NAV is on the stock, if the closing price is at a discount to NAV, if it's priced over NAV. You can see exactly what's going on their website. As you come down here, you have their distribution details. So you can see that this month they paid 80 cents per share. Last month, Tesla didn't do that well in their stock. They paid 44 cents a share. Before that, 82, 90, 90, 99. Okay, so they're putting out some huge dividend payments, and that is very exciting to me because I am a dividend growth investor. Even though this dividend is not necessarily growing, it's just so big that who cares? If I can earn 60% return for the rest of my life, I think all of us would, and I think that part of the YOLOing of using a little bit of margin on our account to generate this level of income is that if it works, it's fantastic. If it doesn't work as advertised, well, it is what it is. But your growth at the beginning of an account is going to be the most important. So if I can supercharge the account's growth in any way, I would like to do that. And this looks like an opportunity. You can see here their holdings, top 10 holdings. They have some treasury money that's kind of stashed away. You can see that they have some call options on Tesla stock. Tesla at 240. They have 4,850 call options on Tesla at 240. Guys, that is insane. So, 15% of the portfolio's value right now, or $20 million, is sitting in an option on a stock that is blown past 240. It's at 275 or whatever it's at right now, which is insane. They also have sold some call options that are in there. This looks like a Tesla put. So, I mean, if you take this, whatever it is, 20 million, $500,000, and then you subtract about this 5.5 million from it, that's 15 million of just money sitting there waiting to get paid out to these people at a 1% cost for the management fee, and I'm loving it. Like, you can look at it right here, and there's so much room for this thing to grow, because I think people are just going to see, wow, this is consistently paying out, and the dividends are just massive. They have $9 million of cash on hand. $9 million just sitting there, ready to roll for whatever they want to do. It's nuts. Love these guys. Anywho, so I get excited about this stuff. But so that's what Tesla is. That's what they're up to. Look, they got Naruto on the thing, not clipped nails. Whoever didn't clip this guy's nails is an idiot. You're taking a photo, like, get some cocoa butter. Your hands are ashy. It's disgusting. Anywho, but they got this guy throwing Rasengans. I'm in it. It's for me. So, more so than that, we're going to take a look at some charts. And we're going to start with Tesla's chart, because everyone knows Tesla. Everyone's heard of Tesla. I own a Tesla. I hate the thing, but I own one. And we're going to take a look at some of their data here. So last month, Tesla stock was up 49.29%. That is unbelievable. I mean, that's absolutely unbelievable. And you could argue it would have been better for me to have just YOLO'd into Tesla stock and Tesla options. I'm like, you're probably right. But we missed that boat. So how do we secure the bag? We missed the opportunity with that, and that's okay, because I it is what it is. If we look at the sixth month chart, we would have doubled our money. So in the past 6 months, Tesla is up 99.17%. Holy moly! And that's not even considering from the low. It was at 108. So when you're looking at a stock that was at 108 or 101 on the 52-week range to 275, I mean, that's just unreal. That's such a ridiculous amount of money. But might I digress? Okay, so we're going to look at this chart here. We're going to look at it for 5 days. 1 month. So 8.62, 49.29, and on the daily chart, it's $5.34. So we can see that Tesla is on the rise, and that's a lot, or most partially, because of the news, okay? We have a lot of people, and we have people kind of all over the place. What I like to see is future earnings in Tesla, or in any stock. So if I see that there's actual legitimate cause for growth potential down the road, that to me means that I can make more money, right? So when I see things like this, Rivian Automotive is the latest automaker to join Tesla's charging standard. Electric vehicle maker Rivian announced on Tuesday that it has agreed to use Tesla's charging standard to set up its customers to use the expansive Tesla Supercharge network right? This is Rivian, guys. They're not a huge company, and there's been some talks of Ford maybe having a setup, or GM maybe having a setup. But we have Rivian now saying, "Hey guys, we're going to use Tesla's thing." Rivian stock skyrocketed 5.51%. Lucid stock tanked. I mean, it's pretty easy to see what's going on there. But this to me means earning potential for the future, right? So if we go back to Tesla stock, wherever it was, where'd it go? I don't know. What's going on here? There we go. All right, so if we go back to Tesla stock, we're going to go back to the 5-day chart, or back, let's go to the 1-day chart. So we have 5.34%, and we have 1.33% in post-market trading, meaning this trend is continuing forward. More and more people are believing it. They're sipping the Kool-Aid. They're in on it. Now we're going to look at yield max. So Tesla, right? We have the 1-month earnings at 21%. So how is a fund that's entirely Tesla call options not as high? The growth rate is just lagging a little bit. If we look at the 6-month chart, it's a little more volatile looking. But if we look at the 5-day chart, we can see this trend is almost exactly on trend with Tesla. And then if we look at the 1-day chart, we're about a percentage point behind Tesla's action, but we are on the increase. So there's also, they're not posting any after hours trading. However, remember, we looked at it before, and it was hold on, what did Sofi say? Up 0.68%. So we have another 0.68% to go in order to keep up with Tesla. So, a lot of people are going to say that doesn't really matter, not a big deal, who cares? But we're going to look at the chart side by side. Okay, so now Tesla hasn't been around as long as Tesla, but if we look at it here, when the fund launched, the pricing was a little high on Tesla, and it kind of figured out where they were going to fall in line with each other in about February. And then look at these stocks, guys. They are exactly in line with each other, except as Tesla stock took off, Tesla stock is still struggling to get off of the ground. And it's not, in my opinion, it's not because they're not doing things right, I don't think. We just looked at their profile. We can see they're printing money. I just don't think anybody knows what it is. It's $150 million, $120 million market cap, and Tesla is one of the biggest companies in the world. So when we're looking at it, it's people aren't diving into this at the same rate that they're diving into Tesla, and that to me speaks opportunity, because we're gonna see those gains in Tesla as people find out about it. Because when people look at it, all that profit from trading the Tesla options is going to show up as either dividends, or it's going to show up as money in the management portfolio. So it's a good thing. I think it's a good thing when I can look at their portfolio and say, wow, these guys are sitting 15% of the entire market cap is equity in a trade, and then the other 7% is sitting there in cash. That to me looks like a good thing to get into. I like cash. Cash is nice. But yeah, so this thing's just taking off, and Tesla is just not taking off quick enough for me. But yeah, so really interesting chart. That's kind of why we decided to put a bunch of margin on this and hopefully let it grow. I think that if we see this, let's go to the 1-month chart. If we can see this growth sort of catch up, even if it's halfway to Tesla's growth, that should be, in that $19, $20 price point. And quite frankly, most of YieldMax's funds are currently priced above $20 per share. But now that we've gone over that, we're going to dive into the portfolio on Seeking Alpha. We're going to take a look at what's doing what and how we're starting off the week. All right, so before we jump into Seeking Alpha, I do just want to hit this channel tracker real quick so we can keep up to date with our goals and where we're at and how much money we've made and yada yada. So today is June 20th of 2023. Not weighing myself, not tracking my weight loss right now. I did just come from the gym a little bit ago, which is maybe why I'm so pumped up. But my investment balance is $7,358.27. And guys, that does not include the margin. That is my equitable investment balance, which means if I sold off everything, paid off my margin, that's what I've got. Dividends earned, we're at $88.34. Total growth, yeah, the market was closed on Monday, so we're at $557.94 of total growth, meaning we actually made $250.94 today on all these margin plays. So pretty exciting, and that's a huge chunk of change to see roll in a day, or at least for a portfolio this size. YouTube income, still not getting paid from YouTube. We're working on getting monetized. So if this is the first video you've seen, you like the content, drop a subscribe. You'd be one of the 1,773 subscribers that we currently have. To those who are there, thank you. If you want to support the channel, you want to get into investing, and you want to get into margin or anything like that, I will have a link for Sofi down in the description. That's where we're trading. Margin rate that I have is 8.5%, which is like tolerable. And it's not like 15 like a lot of these brokerage houses. So link in the description. Total views, we're at 203,996. And total watch hours, we are at 3,826.6. So moving on, let's dive into Seeking Alpha, where we can check out the entire portfolio. And guys, remember I was saying that balance, that 7,300 whatever it was, is our equitable balance. You can see here our total account value is $9,372.44. But again, we don't like to look at it like that. We like to look at how much equity do we have, because that's really what matters. That's what's mine, you know. But anyway, so sorting by value, we have Tesla at the top. And guys, honestly, this does kind of make me sick. I love it. It's awesome. It just makes me sick. We have $1,809.22. That's 103.15 shares. The current price is $17.54 with a massive dividend yield, and we have to wait till next month to get paid out the next dividend. SCHD though, so SCHD and Realty Income, we put $10 every day in. So we're at $1,212.18 of SCHD. That's Charles Schwab's U.S. Dividend Equity ETF. We have 16.69 shares, and the price is on the climb. So that's really good to see. It did take a 1% hit, so it's weird for me to say it's on the climb. But it's on the climb, guys. It was teetering around that $70, $69 price point. I didn't like it. Now it's at $72.64. Feels good. You know, it's a good spot. Realty Income Corporation. This kind of took a bath today, but we'll get into that. So we're at $1,178.97. So for the shares, that's 19.54 shares. Almost 20 shares. That's pretty good. The price is at $60.33, bringing the forward dividend yield to 4.99. So I say this, and I say this a lot. If the dividend yield of Realty Income Corporation is above 5, that to me is like a no-brainer purchase. Now, we dollar cost average on this portfolio, so we buy it every day. But for those who are looking at like different examples of when to buy, anytime you can buy Realty Income Corp for like a 5% dividend yield, that's just a steal. They're on 26 years of consecutively growing their dividends. They did increase their dividend a very small bit. It was like 0.2%, but they did increase their dividend this month. So, you know, they do that. They just increase it by like a half of a penny or whatever all the time. But over the course of 50 years, that makes a huge difference. But they did lose 1.73% today, so that was kind of rough, but whatever. That'll bounce back. Now, coming into the next position, we have JEPQ. So JEPQ, we are not investing into on a daily basis. With JEPQ, we handle things slightly differently. We buy JEPQ using profit from options trading or options premium. So this whole position has been bought by buying options and selling options. So we have $834.27 there. That's 17.45%. And the price is up a little bit today. We're at $47.82. I personally think that this is also kind of lagging like Tesla is, because 11% of this fund is Microsoft. And how can Microsoft be up like 50% and we're up 17%? Doesn't make sense to me, but I think, again, people just don't know what JEPQ is because they know its older brother JEPI, and they don't know that you can pump money into JEPQ and make bank. But this is paying a monthly dividend, so I look forward to getting that new dividend at the beginning of next month. And then into the $5 daily contributions. So we have Pepsi leading the charge. We are at $629.14. That's 3.4 shares, and the price of Pepsi is now $185.31. Good to see it kind of climbing. It's kind of 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's fine. Today was that 1 step back, not a big deal. That dividend is looking pretty good though, so I don't mind the price staying down at like 185 because we're going to get paid a dividend. We have a Pepsi dividend payout coming in the next couple of days, or a couple weeks, next couple weeks. Next in the lineup, we have JEPI. So JEPI, JP Morgan Equity Premium Income ETF, we're at $625.28 there. It's 11.44 shares, and the price is at $54.67. If there was ever a fund that I would just consider stable through rough times, this has been the stock. If you look at it, guys, I mean, it's paying a good dividend, which is great. It does pay that monthly dividend, and the year-to-date performance, it's up 0.66%. Today's performance down 0.33%. I mean, it's kind of just doing what it's supposed to do. JEPI is a defensive ETF designed to pay you a monthly income, and it is being a defensive ETF. It doesn't move a lot. It just kind of sits there and pays you out 8, 9, 10%, whatever it pays, and you're good to go. So that's going okay. Procter & Gamble back up above BlackRock. So we're at $619.88. That's 4.18 shares, and we're at 148.16 per share. Still above 2.5% for the dividend yield. Usually this hovers around 2.4, so kind of a discount, sort of. But it is a company that's grown their dividend every year for the past 66 years. So again, those like semi discounts, they're pretty strong when they're going to raise the dividend again, or hopefully, knock on wood. Next, we've got BlackRock. So BlackRock took a bit of a dip today. We're at $615.44. That's 0.89 shares, and the share price is now down below 700. We're at $690.95 per share. We're still in what I would consider that normal forward dividend yield price. As I have said often before, just like with Realty Income Corporation, if you can buy the dividend at 5% or higher, BlackRock at a dividend of 3% or higher is also, in my opinion, a pretty good deal. So we're not quite in that pretty good deal category. We're in the, let's buy it every day and see what happens category, which is fine. But they have raised their dividend again for the past 13 years. So pretty solid. We're teetering on the year-to-date performance being even. So pretty stable there. And then coming down to the not so stable, we have MPW. So MPW, we're at $595.39. So that's 65 1.36 shares of MPW, and the price is $9.11. So, guys, this thing's been bouncing up and down. It's hit that like $9 price line, and it hasn't broken below $9. So I'm loving to see that it's not breaking out, because if it breaks out downwards, that's bad. The position that we have in MPW is actually getting pretty close to even. And I've been saying this for a while now, but like we're $20 away from our position in BlackRock and $25 away from our position in Procter and Gamble. So if we're gonna invest in something where we say at the beginning of the year, this is high risk, high reward, and it's still kind of at the same cadence of like BlackRock or Procter and Gamble, yet paying out a 12.5% dividend at the same time. Solid. I like it. I'm okay with the performance of MPW. I think it's doing well, and I think it's going to come back. The management team's doing a good job at making moves, making sure there's money available to pay the dividend and getting out of some bad debts. I did a lot of research on the equity positions of MPW the other day. Obviously, as always, do your own research. I'm a guy in a triangle-shaped drum. But their total equity was something like $8.5 billion after clearing all debts and assets and whatever. So I don't understand why we're still trading at a market cap of like 6,000. We should have like a 30% price gain just based off the equities. So I don't know how these short people, oh my God. I'm not talking about height guys. It sounds like I am. I'm not. I'm talking about the people who are shorting the stock. Just came out. It just sounded weird. But how the people who are shorting this are actually doing that successfully is kind of blowing my mind. I don't really understand it. But to me, MPW is still a really good buy. If you look at just, if they sold off everything and closed down the company tomorrow, we would all get paid like $14, so or $13. I don't understand why we're at the price we're at, but anywho, I can still keep buying it for the cheap price, and we'll do that at least till the end of the year. I mean, we're in this far, we might as well get 100 shares of the thing. Next, we have AT&T. Unfortunately, we have dipped below $16. AT&T just loves getting crushed, and that's what it's doing. So it's $536.22 of AT&T stock. We're at $33.98 at a share price of $15.78. So the forward dividend yield, in the past, I've said if you can get it above 6, that's a steal. If you can get it above 7, that's unbelievable. But we're still buying a really, really cheap dividend here, which I like. But the CFO today, like the management at AT&T right now, you guys are a joke. I hope you're watching this. You're a joke. The CFO was like, oh, yeah, like, I know we're hurting, but, like, we couldn't sell more phones. Like, what are you doing, buddy? Like, you said you come out here, you're like, yeah, I know we were going to sell 800,000 new phone lines. We sold 400,000 or whatever he said. I don't remember. He said something stupid, and then look what happens. Like, I lose 1.74% of my, my portfolio's growth on that asset. And that's terrible. Like, have some composure and greet the people with class. What are you doing? You're the CFO of a major multi-billion-dollar company, like a deca-billion company. Like, what are you doing? Anywho, Appley, YieldMax's Apple Option Income Strategy ETF. It's so bad because we have so much of this YieldMax. Oh my goodness, it's not good. But that's okay. So we have $443 of another YieldMax fund. Here we go. It's Tesla, but with Apple stock. So they buy and sell Apple contracts. We have 20.04 shares, and that is at $22.13 per share. Little bit of growth there. They paid 20 cents per share as a dividend last month, which, again, it's 1%. Like, you're paying a 1% dividend every month, and you can roll it. It's insane. I love it. Anywho, so going over this way, we've got the call options, just so you can visualize them. We have the $17 Tesla call option, which expires on July 21st. So we have a month and a day for this thing to climb as high as it can over $17. Now, when I bought this, I thought it would be a fight for a little while, and I thought it would get to, $18.50. But today it was at like a $17.80. It's at one point. So like for $17.80 on the first day, $80 times 5 call options, right? So we have 5. That's eight, or that's $400 of profit. That's insanity. Right now it's showing that we have a $240 evaluation here, but that will definitely go up tomorrow. Like, it's definitely going up. The other contract that we have is we have JetQ $48 call option for that same date, July 21st. So we have 3 contracts of that, and that is currently priced at 11 cents per share. Here's another one, though. I just don't understand. If we look at JetQ, first of all, we're 18 cents away from being in the money with the call option. But if I look at the 5-day chart, and let's look at the month-long chart, it's gone from 46.83 to 47.81. I mean, is it reasonable to think we have $1 of growth here in a month's time? I think so. And again, especially when you look at their holdings, 11.64% of this is Microsoft, 9.66 is Apple, 6 3/4 is Google, Nvidia is 6%, Amazon's 6%. We got Facebook at 3.5%. That's like how can a stock, if I look at their 1 month chart, be up 2.09, and then let's look at like Microsoft 1 month chart. They're up 5.39. Let's look at Nvidia 1 month chart. They're up 40%. Let's look at Apple 1 month chart. They're up 6.3%. Guys, buy JetQ. Doesn't make any sense. I think it's reasonable to think we have a 5% gain, probably a 5% growth on JetQ, just to match the lowest growth of all of the things in it. So if we match that 5% growth, let's see what that looks like. We're at 47.82 times 1.05. That's a $50.21 position. So if we have 3 call contracts and we can make $200 per, that's another $600 that we can use to buy shares of JetQ. That's what I'm hoping. So I'm hoping that we make, I don't think it'll break 50 this over the course of the month. I don't. But do I think that I can make $100 per call? Yeah, I do. So I think that we should be able to get this JetQ position over the $1,000 mark, by the end of next month. I'm hoping to get it over the $2,000 mark by the end of next month and pay off our loan while keeping all these Tesla shares. That would be the best case scenario. If we can keep all of these Tesla shares, pay off the margin from our call options, and then pump the rest into JetQ, that is the goal. We are sticking with it till the end of the next month. But guys, we are almost halfway through the first year of our YouTube channel. So yeah, July 1st will be the halfway point through the first year of our YouTube channel, and things are actually going pretty well. So I'm really excited to see how much money we have in this account. One of the things that's kind of cool is if you take every day $50 Monday through Friday, that's $250 a week. And if you do that by 52 weeks, right, you have $13,000. So really, there's a couple big numbers for us at the halfway point. Obviously, we want to be in a position where we have more than $6,500 in the portfolio, because if we have more than $6,500 in the portfolio, then it means we are beating losing. So that's terrible, but we want to be beating losing, and we are beating losing as of right now. So, it's a good way to gauge the whole portfolio and everything that's going on. How far ahead of schedule can we be? You know, the whole thing is we're trying to set ourselves up so that we can retire by 45 years old. And I'm currently 34, so we got 11 years to make this work. We're going to keep pumping money in. We're going to be, slow rolling a lot of these trades. And I won't even say trades, investments. We are investing in Pepsi. We're investing in Jeppy. We're investing in JetQ. We're investing in Procter and Gamble. You know what I mean? Like, these are companies that I believe in. SCHD, one of the best dividend growth portfolio staples of all time, right? We have Realty Income Corporation. I believe in them. You know what I mean? So when we have these companies that we're buying into, they're companies that I want to own a part of, and we're pumping that money in. If we can follow trend and make month-long purchases, or buy a call option and then sell that option with price movement of the stock to capitalize on some premium and buy more JetQ, I'm in. I love it, right? So that's kind of the whole thing. I want to be able to build this portfolio in a safe, slow, and secure way to secure my future with just a couple little moves to accelerate that. And that's why we started using margin. We're not using margin to buy our portfolio holdings, right? I guess we kind of are because we bought Tesla. But Tesla is a income generating machine. So now that we have 103 shares of Tesla, right? If we had done this last month, I would have been able to buy it all for like $16 instead of $17. So, hindsight's 2020. The last month's dividend was 80 cents per share. We have 103 shares. That would have been 81 or 82 something, 82.40. Yeah, $82.40. That's a lot of money. 1 month of dividend payments, guys. So, like, with the way everything's set up now, if these dividend payments keep coming the way that they've been coming, next month we should actually earn $100 in dividend payouts. That's a lot of dough. Like that, if that doesn't help accelerate the growth of the portfolio, guys, like, I don't know what will. That is the whole point. We're trying to accelerate what they call the dividend snowball. So when all of those Tesla shares pay me a dividend, and then that dividend buys more Tesla shares. So next month, I should end up with 110 shares of Tesla, let's just say, whatever it is, right? And then those all pay me 80 cents. Then I get 115 shares of Tesla. Then eventually you just can pay it all back, and you just have a bunch of free Tesla. I'm paying 8.5% over the course of the year for this margin. And it just paid me 5% last month. So, like, that's pretty good. Of course, past results are not future earnings, right? We have to be careful with this, guys. And that's why we have it set up in a way that, like, I can cover it. If something happens, I'll stroke a check to Sofi. I don't care, right? It's not that big a deal. It's not that serious. I don't want to ever do that because I'm trying to show that you can do the $50 a day, and then eventually you'll get to the point where you can leverage that to get more invested without throwing the extra money in. So that's something that's really important to me. This is like a step-by-step guide, and I want to look back at it and be like, oh my God, that worked. And I want people to be able to watch from the beginning and skip through and see the videos and be like, whoa, that just leveled up the whole thing. Like that one move. And it's like, guys, if you put, like, the amount that I'm going to have to pay is like $12 a month for the margin. I'm paying like $12 a month. I mean, $275 today. So it's like, cares? I mean, obviously I care. Don't get me wrong. It's money. I don't want to speak that flippantly like that. It's not me. But if my monthly earnings are out earning the monthly costs, it's worth doing, in my opinion, especially when the portfolio is this young. I'm 6 months in. If I'm 6 months in and I can leverage it to make an extra $100, $200 a day, that's massive money this early on. Like this early on in the portfolio, that's huge. That's an extra week of investing or a month of investing if we can make $1,000. If we can make that extra money this month that I think that we can make, I legitimately think that the options that I have in place should earn me at least $1,500. So if that's true and that happens like that, I can pay off the margin in one shot, and all that Tesla was free. That is unbelievable. So we're feeling motivated. We're feeling good. Results are coming along pretty well with the portfolio, and we just hope that it keeps on the up and up. On the flip side of that, if Tesla tanks tomorrow, well, I'm going to be depressed and it's going to suck, and I'm going to have to eat $1,800, like whatever I owe in Tesla. I don't know. But as of right now, it looks like we're trailing the earnings of Tesla. We are not keeping up with the growth rate of Tesla. And that's, I think, because people don't know about Tesla. And I think the word is going to break, and the word's going to break fast. It's going to be one of those things where people are going to see like, oh my God, what's this random fund that's paying 70%, 60% annual dividend yields based on Tesla stock, and it follows the Tesla stock all the way up. I can get into Tesla stock, have the growth, and have a dividend because Tesla doesn't pay dividends. So I think people are going to be stoked. Anyway, that's kind of what's going on. I bought some Pokemon cards the other day, and I've been pulling fire in the Pokemon cards. Like I just got from the new set. I got one of these Bad Larrys. Bang! I got that. The new art on these new Pokemon cards, guys. Like, look at that. Looks pretty cool. The art's good. Anywho, most people aren't here for that. I wish you all happiness, health, and wealth. If you found this video interesting or exciting or informative, please put a like, put a comment, share it, do something, please. But yeah, I wish you all happiness, health, and wealth. And with that, as always, roll the outro.